the conversation you have to have with your mortgage lender. So if you guys are working with me, we're gonna have this conversation no matter what. You can try to escape it, but we're gonna talk about it. A lot of other lenders don't know that you should talk about this. So if you're a lender watching this, guys, please talk to your clients about debt to income. Okay, so what the heck is it? Why should you care? Well, debt to income is one of the biggest indicators on if you're gonna have a nice life when you own that house, or if you're gonna be house poor. And as we see housing affordability decrease, what we're gonna see is more and more lenders max qualifying buyers. So, and I've said in other videos, do not get max qualified. Do not do it. It is the path to eating top ramen. It is the path to being house poor. It is the path to doing nothing but sitting in your house and wishing you had not bought that house. You do not want to be max qualified, but it happens every day. It happens for a variety of reasons. You may ask to be max qualified. Your lender may just do that automatically because that's what they think people want. If you guys are lenders, you need to be educating people about why that's a bad idea. They could be doing it because the real estate agent that sends them business is saying, I can't get them anything for that. You got to get them higher, push them higher. Yeah, and in fairness, it could be true, right? They may not be able to get you anything lower, and you may need to be higher to qualify. But the key is that if you're being pushed higher, if you are max qualified, you need to know, and you need to understand what it means, okay? So first, let's talk about what the basics are of debt to income. There is a front end and a back end number. So the front end is the proposed housing payment, principal, interest, taxes, and insurance versus your gross income. So that's before taxes. Okay, so I'm just going to use a big number. If you make $10,000 a month and your proposed housing payment is $3,000, well, your debt to income on the front end is 30%. Okay, now the back end ratio is that proposed housing payment plus what is on your credit report as minimum payments. Okay, student loans, totally different world in terms of how we calculate that. That comes into play as well, even if they're currently in forbearance because of the government thing. There's factors to that, but it's the proposed payment plus your monthly debt versus your gross income. So let's say you've got a $500 a month car payment and $500 worth of credit cards and student loan payments. Okay, $1,000, easy peasy. So $3,000 for the house, $1,000 for the debt, so that's $4,000 versus your $10,000 income. That puts you at 40%, okay? So in this case, your front end ratio is 30, your back end is 40. Now, I have an entire video on how to calculate this, and I actually have two videos. I have two videos because I did one at 10,000 like 3 years ago. Oh my God, you guys have to go through the comment section. People hate me. And I was like, guys, I'm just doing lazy math for F's sake, help me out here. So I did do another video later with a whiteboard. It's in my Home Buying 101 section, and I whiteboard out different numbers, and you guys can do it along with me. And I think it's so critical because here's the thing. With my pre-approval process, I fully underwrite everyone now. I didn't used to do that. This is something I've really gotten into heavy in the last year because I think it's critical to having a zero stress mortgage experience, which is what I'm always going for. I think, as much as we can do up front, as much of the question marks we can take away, the better. And as a wrap up to that, after you're fully underwritten, there's a link to book a call with me where we spend half an hour to an hour talking about everything. And one of the things I'm looking at and talking to you about is debt to income. So if I'm looking at it, I'm like, hey, your debt to income's, 30 on the front, 35 on the back, super good, not worried. You do have a little wiggle room if you need it, but if you can find a house in this price range, awesome. Whereas sometimes I'll be like, hey, your front end's 50, your back end's 55, it's possible, but this isn't, we need to talk about this. What other income do I not know about? Because I don't want you to be house poor, and we really dig into the monthly payments because what happens so much with buying a house is no one knows what the heck they're supposed to do. They don't know what a lender's supposed to do. You know, they count on a real estate agent to like tell them who their referral is. They're assuming that they're getting the best that there is in lending. They get a letter and they go shopping, right? And then they may or may not read the paperwork. And sometimes they read the paperwork at the end. They go, oh my God, my payment's what? I can't pay for this, okay? It happens every day. But you guys are watching this video, you're on this channel, so you know better. So the key is gonna be know your debt to income. Now, sometimes if I see something at, let's say, a 50% back end, is it okay? Yeah, it can be. You know, sometimes there's income we can't use. It could be a household where there's two people, but one person's not on the loan because of credit, so we're not using their income. In that case, if I'm only using one income and the debt to income is 50% and I'm getting an approved, you know, I'm comfortable with that. And I talked to you guys about that. Are you guys comfortable with that? That is the important part, is that these conversations need to happen. But if you're using all the money in the house, okay, every single nickel, the lender's using overtime to qualify. They're using bonuses to qualify. And your debt to income's at 50% on the back end. Guys, it's gonna be tough. If your overtime gets cut, if your bonuses, if we hit a recession at some point, it's gonna suck. So you really wanna make sure you're having these conversations with your lender. If you don't have a lender, guys, I can't say it enough. I am a mortgage lender licensed in 48 states. My team and myself would love to help you. Hit a link, you know, I've got a link to my calendar. Get on my calendar, give me a call, we're happy to help. But if you are working with another lender, please just have this conversation with them. And if they say to you, why do you want to know? Dude, why are you working with them? Like, we've got to stop this behavior, because here's the thing. There's so many good lenders out there, and there's a lot of good lenders that come to this channel who are learning to be lenders, that just want to do the best they can for clients. That's who we want in this business. We want people who will help you, who will talk to you about debt to income, who will help you plan with your payments, who will make you feel comfortable. We don't want people who say, why do you need to know that? You're fine, I approved you. Anyways, I hope this video has been helpful. As always, guys, questions, comments, please leave them, and thanks for watching.